All right, guys. Um, Welcome to the show. We are live. And let me take care of this real quick. Gotcha. So on today's show, we call today's show Celebrity Sunday. And we have a celebrity guest, a special friend of mine, a good friend of the show, Kappa Psi brother, Mr. John Marshall Jones. Welcome to the Bad Out of Debt show.
What's happening, Troy? How you doing today?
Doing good. John Marshall Jones, we affectionately call him JJ, is an investor. We have history together investing in condominiums up in Vancouver, British Columbia. We are neighbors, and I am his neighbor because he turned me on to a deal and I jumped on it. And so, but before we get into all of the particulars about investing and stuff, I know, JJ, you have a couple of things that you're promoting. So would you like to share with the audience a little background about yourself, maybe a little history about yourself, as well as some current projects that you're working on?
Hi, everybody. My name is John Marshall Jones. My friends call me JJ. I graduated from Northwestern University in 1984, joined Kappa Alpha Psi before that in 1980. I came out, once I got out of school, I studied theater when I was there. My decision was that both Chicago and New York were too freaking cold for anybody to want to live in. So I immediately left and went to Los Angeles. And one of the main things that I learned early on about professional success is a concept called positioning. So how do you position yourself to be in the right place when opportunity comes along? So a lot of people that I knew went to LA, washed out, came back. But when they came back, they told me why, which was that they didn't have an agent and they weren't in the union and they couldn't ever figure out how to negotiate that. So I got an agent and got in the union before I went to Los Angeles. So I was already in position for success when I showed up. And I've had a good 30-year run at acting. I'm not the richest guy or the most famous guy in Hollywood, but that don't make any difference to me. I've done well and I live well. And as I say, bills are paid, family's healthy, I'm healthy, God is good. And so I have all those things going on for me right now and had them right through COVID. So many of you know me as the dad on Smart Guys, a long running worldwide hit. Right now I'm doing a show called For All Mankind on Apple TV Plus, which also is a worldwide hit. And we're in season 2. You can pick it up there. And you'll see on the background behind me the words motivated mentorship and then a shield that has the words Kappa League on it. So for those of you who don't know what Kappa League is, it's the mentorship arm of Kappa Alpha Psi fraternity. I'm acting as the national spokesperson for GuideRight / Kappa League. And Kappa League is the oldest and most successful African-American male mentorship program in U.S. history. So we were founded in 1922, just after, toward the tail end of the Spanish flu pandemic, which we'll talk about a little bit later. And we've been mentoring young brothers for the last 100 years and getting them prepared and off for college. So getting them out of the ravages of the streets and into some mentorship with moral, educated, God-fearing men that can teach them a sense of morality and the principles of success.
Good deal. JJ. And for those who may not know, I am a member of Kappa Alpha Psi as well. And JJ and I were recently on a podcast show related to J5, which is January 5th, the anniversary of Kappa Alpha Psi. So JJ, really appreciate you being on the show. We have a long investing history together. Would you like to share with the audience our investing experience, our Olympic play that we did?
Well, one of the things that that I believe in is trying to find something that's almost locked in. It's like if you remember Back to the Future, my man got the almanac and he was able to go back in time and have all the sports winners for 20 years in the future. So if you could find something like that, it would make sense to invest. So I was in Vancouver working on a TV series, and the word came out that Vancouver got the Winter Olympics, and it was going to be 8 years in the future. So maybe it was, I don't know, maybe this was 92, and the Olympics was going to be in 2000. And all I could think at the time was like, oh my God, this is like found money. There's only so much housing in Vancouver. Hundreds of thousands of people are going to show up for the Olympics. Everybody's going to want to rent. A lot of people in a lot of Olympic destinations, they have a surge in people moving to that destination after people come for the Olympic event. So I bought a condo. I found a condo downtown Vancouver, which is the most desirable property overall in the whole country of Canada. Found a condo on the 18th floor with a 270-degree view of downtown and the mountains, the whole thing. And it was doing exactly what I thought it should do. If you found some money, it's just getting more valuable every year. Then the unit next door to me went up for sale, but I didn't have the actual capital to put into buying another unit, nor did I want to take the additional risk. But I knew how much it was going to rent for. I knew that it was going to go up in value. I knew it was going to be managed by somebody else, so I wasn't going to have to be there. So what does a good brother do? He calls a good brother and he says, Troy, there is a unit in this building. I've been doing nothing but make money on it. If I had the money right now, I would buy it myself. But since I know you looking for something, why don't you come on and buy the unit next door to me? And so Troy did. And the short story is our units have more than doubled in value.
Yep.
Probably closer to tripled in value since that time. More and more people are moving to Vancouver, especially from Southeast Asia. It seems to be a landing point. And so they're building more and more condos outside of Vancouver, but there's only a certain amount of space on Vancouver. And because of that, the value of these properties, I would anticipate, are going to keep going up over time. Also, because you're dealing with a customer base that's Asian, in the Asian countries, they're used to smaller square footage spaces. So 600 square feet over in Southeast Asia is a decent sized apartment, it's a decent sized single. So mine is close to 1,000 square feet. Troy's is even bigger. Mine is a 1-bedroom, his is a 2-bedroom. So these are very large units with big kind of window exposure views at a very high floor. There's only one floor above, so it's called a sub penthouse. And it has just been consistently going up in value since I bought it. And so what I do and what Troy does is we have people come in and rent. And so the proceeds from the rental actually pay the note, the taxes, the insurance. And so, and then I have the people pay their own utilities. So I'm kind of an absentee landlord. I don't have anything in my name but the actual note and the taxes of the building, which are paid by the rents. And so essentially the rent, because they're paying the rent, or they're paying the note, the value of the condo is going up, but the value of the debt is going down. And none of that is happening because of my money. So I just keep making money and they keep paying for it. So the concept is identify the trend, buy something that other people will pay for within that trend line, and then allow it to grow on their money.
Good stuff, JJ. I mean, that investment in Vancouver, British Columbia was a big money maker. It's still a money maker. I'm not selling that unit for anything. As a matter of fact, I just bought plane tickets to go down to Colombia, to Medellin. I'm also going down to Ecuador to look at another unit to rent, similar to what we did in Vancouver, British Columbia, because, as we know, Vancouver is the #1 city in all of Canada. And they call it Hollywood North for a reason, because a lot of TV shows are there. That's where you and I actually met in Vancouver. You were shooting that TV show, John Doe. You
Correct.
were playing a detective on the John Doe TV series. And we have mutual fraternity brothers up there where we connected years ago. But a great investment. But again, it's betting on a strategy to get out of debt. So thank you for sharing that with the audience. I'm very happy to have you on. You are our first inaugural celebrity guest. So that's a big thing for us. So let's get into some of the general discussions about stocks and crypto and all of that. JJ, I know you are a crypto type, and you were going to talk about identifying trends in the crypto space. I have Tremaine Palms, my crypto expert here. I'm sure he's going to have some comments. So will you share how you identify trends in the crypto space and what you are doing there?
Sure. First off, the identifying of trends works for any market, right? So let's say, you're looking in the real estate market, and there's a couple different ways you can go. You can go and you can find the least expensive piece of real estate that you can find and get the smallest down payment and give yourself an entry level, and you're in real estate. There's no doubt about it. However, if you can find an affordable piece of real estate in a part of town that everybody wants to live in, unless the trend of people wanting to live there changes, the demand for that kind of real estate is going to be higher than the cheapest. So if you're looking at real estate, if I'm looking at real estate, I'm looking for some place where there's a demand for housing that's just going to stay that way for a while. So for instance, in Los Angeles, on the west side of Los Angeles, I was fortunate enough to purchase a home, and then the trend in an area of town that was already sort of trending, the adjacent areas had gotten too expensive, so people were now moving here to get the same services for a lower price. During that time, everything shifted to something called Silicon Beach. So a lot of the Silicon Valley companies began moving to Venice, California. And then about a 5-minute drive from me, Google bought up this whole massive 2-block mall, and they're moving all their operations in to a 10-minute drive from me. So that says to me, there's going to be a demand for housing because it looks like the place could hold 5,000 people. It's giant. So there's going to be a demand for housing and housing near work. So I immediately started making the plan to build another unit on my property of additional housing. They're called additional dwelling units, an ADU. And the ADU, because I already own the land, the only loan that I would have to take out is to actually build the building, but I don't have to purchase any land. And that is at a significant discount to buying a new home. So the plan is to build this new structure onto my property, and then to rent that structure out for a premium. And right now, the rentals in this area are trending upwards. So I'll be able to pay for both the first house and the second house with about 50% of the rentals, and then the other 50% will be profit. So that's what, when I say identifying trends, that's kind of what I'm talking about.
So how you do that in crypto?
Well, here's the thought. The trend that we're seeing now actually began in 1919. So in 1919, we got hit by the Spanish flu. And everybody was told, hey, this thing is really terrible. Everybody got to wear a mask. Everybody pitched in together and wore a mask. And then after that flu season was over, they declared that, they had beaten the flu. Everybody took off their masks. They had big parades and big gatherings. And what do you know? The Spanish flu was not over. It came back with a vengeance and killed way more people than with the second wave than in the first wave. But ironically, when they tried to get people to put their masks back on, the people rebelled. And the people said, hey, you're trying to take away my freedom, and you're against my liberty. And how dare you try to tell me that I can't go to church and that I can't go to a ball game and I can't eat at a restaurant. Everything you're hearing now, none of it is new. It's exactly the same way that people reacted to it then, which should tell you people have not changed. Their behavioral trends are going to be similar to what they were coming out of the pandemic then. So what happened at the end of that pandemic? Well, the people who lived through it said it took about 2 years before people actually started to feel comfortable going out again in mass. Now, mind you, they didn't have a vaccine. They just had to let it hit herd immunity. So it took a couple of years. But when people started coming out again, they went buck wild. And it was called the Roaring 20s. Ooh. And all they wanted to do was hang out and drink and spend money and invest in the stock market. The stock market, that was the first time that regular people had an opportunity to get in on the stock market the way that the rich folks were. So only rich folks were trading stocks before that. But after that, the regular person got to get in. So everybody was, if you see those old movies where they had that ticker coming out of the glass ball and you reading the ticker to see which stocks are working, everybody was into stocks for 7 years or so until it all crashed. Now, how does that play with us today? Well, we just went through the same 2019, 2020 thing. Now we're in 2021. Everybody's been locked up. Nobody wants to wear a mask anymore. No, you're taking away my liberties. I want to be able to go out to restaurants and bars and what have you. So they're already opening back up again. The vaccine is coming. Everybody's going to be able to be vaccinated within 2 months. So what do you see people doing now that they know the vaccine is coming? People are out. It's spring break. People are out partying. Those people that are partying on spring break, when they get COVID, most of them don't get really sick. They get a little ill, they come back. That's why they don't care. The people who were getting really sick, those are the first ones they vaccinated, which are the people in the nursing homes, then the people over 65. So there's going to be, by this summer, we've already been told by the president, what we're aiming on is July 4th for everybody to be able to get back out and be able to start mixing and mingling. Now, at the same time, they're dropping $1.9 trillion into the economy. So there's money supply, which is the money they're dropping into the economy. And then there's money velocity, which is how quickly that money gets spent and circulated through the economy. So when you have low money velocity, you have a depression because the price of everything comes down because nobody's spending money, right? But when you have high money velocity, when people are partying and spending, the price of things go up.
Uh-oh.
Okay. Now, before it was set up for that to be reflected in real goods. So real estate is one real good. Money's flowing. Everybody wants to get into real estate. The price of houses goes up. We all know how that works. It's the same thing with gold. It's the same thing with art. It's the same thing with all of these investable commodities, platinum, silver, copper, whatever it is. When demand goes up for it, that goes up. Well, normally that's where you would see inflation play itself out, is in real goods. But we have created something where people have a choice of how they're going to invest that money. So let's track what happens. You get your check. What's the first thing you do with your check, Troy?
I invest it.
First thing you do is you put it in the bank.
That's true.
Right? So your money has to be digitized before you can do anything with it.
Yeah.
Right? So now that it's in the bank, there's only a few places you can spend it. It's in the bank. You can invest in real goods. You can invest in gold. You can invest in stocks. You can invest in crypto. So real goods, precious commodities, stocks, crypto. So if you want to go into real goods, you got to move your money from the bank. You got to go find somebody who's a dealer of real goods. You have to go out and go through the process of purchasing the goods. There's a lot of paperwork that has to be signed. You have to get the goods delivered, or you have to go take possession. It's something that you have to be involved with physically, and it takes some time. So if you take the two kind of real goods things out of as these sort of future investments, what you're left with is stocks and crypto. The older people feel most comfortable with stocks. They don't even believe that crypto is anything real. But if you grew up relating to the world through your cell phone, then moving money from your bank to stocks or your bank to crypto is moving it from one app to another. It's not a foreign kind of thing. It's just which app are you going to keep your money on? My feeling is that this crypto market, the present crypto market, is the stock market of the 1920s. It's a place where somebody can get in for almost no money. So you can get Ether Classic right now for $13. So you got $13, you can get into crypto. You can get, I think it's Stellar Lumens, which is now supported by Bloomberg in terms of having investment information. So it's got institutional support. You can get that for 50 cents. So last year, Stellar Lumens was at 3 cents. By the end of the year, it was at 60 cents. So it multiplied 20x during 1 year. Now that may keep up, it may not keep up, but the fact is it did it. And there's $1.9 trillion that they're going to drop into the economy. And what happens? Sleepy, you get your check. What do you do first? First, you invest, you put it in the bank.
Yep.
Then you pay your bills.
Well,
right?
I invest first, and then I pay my bills second. I pay myself first. And if I can't pay my bills, then my bill expenditures are too high. So I always pay myself first. The first thing is my investment to pay me first. That's my future. And then everything else gets paid second, which I can afford to do because I've already made a commitment on what I'm going to invest check by check. That's going to happen regardless. And then if I can't pay the rest, then I need to downsize personally in my personal expenses. But I pay myself first. But go ahead. That means invest first. But go ahead.
So you're going to, whatever portion of money goes into your bills, let's say you pay your house note.
Yep.
And now Bank of America has that money. And what's Bank of America going to do? They're going to invest. So you got a car, you pay, your note to Tesla. Now Tesla, if it's Tesla Finance, now they have the money. They're going to invest. So no matter where people spend their money, eventually it's going to get to people that don't have to spend money anymore. All they do is invest it. They have such a surplus, right?
Yep.
So eventually the money is going to end up in the hands of the investor class. And we have two investor classes. We have one that really knows technology and one that doesn't. So if you're over 45 or 50, you're probably not as savvy with the technology as somebody who's in their early 30s. So those early 30s people, they're doing their whole life through their phone. This is something that you and I don't have any concept of. They got friends they never met, right? They got all kinds of apps that are doing stuff that you don't have to talk to anybody. Siri, what is a Bollinger Band? And here it comes. So you don't have to really do any digging for anything. It's all instantaneous. So for them, the trend is toward apps and simplifying life. And your easiest way to invest, as far as I'm concerned, for that whole group of people, that, half or 50% or 40% of America that will be getting these checks, they're going to have an opportunity to get on something like Coinbase and actually invest in crypto, and they're going to be able to do it all on their phones. And the convenience of doing that is going to, for most people, be much more attainable than trying to buy real estate or trying to buy gold, or maybe even if they don't have a conduit to get in, it's a lot simpler to understand than the stock market is. And so my feeling is that over the next 2 to 3 years, we're going to have a whole new group of crypto millionaires that are formed based on $1.9 trillion getting into people's pockets, them spending it, that upspend going until you get to an investor class. The investor class has to make a choice on where they're going to put their money. Crypto is killing the stock market right now. I think that trend is going to continue for several years until that money, that spendable money, is no longer available. So $1.9 trillion is going at least until November of 2022 when they have the next election. Then I sincerely believe there will be another spending package that comes along that'll be like an infrastructure bill where they put a bunch more money out here. More people are going to have access, and it all happens on your phone. So my bet is that the trend of taking care of your business on your phone is going to continue, especially for people that are under 35 years old. And a bunch of them are going to have a bunch of money to do whatever they want with. So I'm betting on the top two cryptocurrencies and the ancillaries that go along with them. So Bitcoin and Ethereum are the top two. Bitcoin has a junior version called Bitcoin Cash, which tracks at about 1% of whatever Bitcoin's doing. So if you can't get into Bitcoin, that'll make no difference. Go get some Bitcoin Cash. It's going to track with it. Ethereum Classic tracks about 1% of what Ethereum is doing. So if you don't have the money to go get some Ethereum, go get some Classic. It's tracking right along with it. My other favorite is a crypto called Chainlink. And Chainlink actually serves a function in helping, if I'm right, and I'm sure Palms can correct me on this, but it serves a function in linking cryptocurrency into different kinds of consumer uses. So if I want to spend crypto, let's say I get on PayPal, I get some crypto, I want to buy something on Amazon. Now Amazon takes crypto and I purchase it on Amazon. Amazon sends me the stuff. So crypto is effectively money now that's going to be accepted in more and more places. And Chainlink plays a part of linking those different functions together. So as crypto expands, another trend that I think we're going to see is that cryptocurrency is going to be used, instead of cash. You're going to be able to just buy and sell stuff with crypto. So whatever is linking those transactions together is an essential part of doing the transaction. So it's got to grow in value as you start using it more in the marketplace. So that's where I think things are going, and that's what I think.
Okay, all right, Mr. Palms, you've been patiently, quietly sitting here listening to that. You are our expert. Your thoughts, Mr. Palms?
First, let me say it is a honor and pleasure, man, to have JJ on the show. And Troy did a phenomenal job of bringing him in. But man, let me tell you something. I concur wholeheartedly with what JJ said.
I knew you were going to say that.
He was right on spot. For many of you who are, on the show, watching and supporting the show, first, let me say thank you. Thank you for coming. And if you like anything that you heard this morning with JJ say, please hit that subscription, hit the like button, and man, show some love to the channel. But listen, JJ did a phenomenal job of explaining the crypto space, man. And so I was sitting back, man, like a little kid in a candy store, just give me some more, right? Very good outlook, very good perspective. And I hope all of you, at least over the last several months that we've started the show, have dibbled and dabbled into it. You've gained a little bit more confidence. And what we've tried to do on the channel is just to give you some additional tools, if you would, to increase your education in the crypto space. And certainly JJ was able to do that this morning. So I certainly appreciate that.
Right. You got the endorsement from the Crypto King. JJ.
I ask you this, because this is something that I discovered along the way. We think of these cryptocurrencies, we think of Bitcoin, we think of it in terms of it as a coin, like, you have to buy one, but you can also buy percentages.
Absolutely.
Of Bitcoin or of an Ethereum. So for instance, if somebody wanted to get into Ethereum and they only had a couple $100, they could actually buy like a tenth of an Ethereum, right?
That's correct. Absolutely.
And so, yeah, so none of it is prohibitive. And that's why, the guy that is working construction or the young lady that's working at McDonald's, she can actually get into crypto where it'd be much harder for her to get into stocks. And yes, from what Troy was saying, somebody could decide, well, look, I got $20 extra on my check. So when I get my check, I'm going to pay myself that $20 extra first. And I'm going to put that aside first. Then I'm going to pay all my bills and I'll have, whatever it is for food and, whatever to sustain. But that $20 is set aside. And for that $20, I can buy $20 worth of Ethereum.
Yes.
And if I keep stacking like that, eventually I'll have a full Ethereum token. And what I like about getting a full token is that then you could just look at the market and you can see how much money you made or lost up or down. But generally, what's going on with crypto is that people have been talking about crypto, saying that it was going to collapse and, oh, it's too volatile and, oh, you're going to lose all your money. But the truth is, no matter how much it's gone down, it has always come back and gone up more. So the trend that you're seeing is going up like this. Even if it does this on the way up,
Absolutely.
it's still going up.
Absolutely.
Right. So,
Absolutely.
So I just wanted to say to anybody who's watching it, don't let the numbers that you see make you feel like you're excluded from the market. Bitcoin hit 60,000 a coin a couple days ago, right? So you probably don't have $60,000 to drop, but you may have 600.
That's right.
You could take 600 and you can get, 1% of Bitcoin right now. You can get a 1% stake. And if you do that, on a regular basis, you're taking your money, you're paying yourself first. So you know what you're going to invest, you pay off your bills, and now you put your investment in something that's going to grow. It'd be 600, it'd be 60. But I guarantee you it'll grow based on the trends that are going on right now.
Yeah, go ahead, Patrick.
And I would like to add to that you can also buy an ETF on Bitcoin. It's called GBTC. It's a ticker symbol. It's an ETF.
Okay.
An exchange traded fund. And it trades right now it's trading around $50 a share. But if you just want to dabble with it, you could actually get in there and just buy one share for $50.
There you go.
There you go. Well, I would say this show is well on the crypto side. Typically, we talk stocks and options as well. I think for the sake of time, Patrick, we will, kind of stay on the crypto side a bit on this show. We'll go over to Mr. Palms. I know he has some crypto updates. I know he wanted to talk about volatility in the crypto space, and maybe JJ would have some feedback on that. So let's take a little back seat today, Patrick, to crypto, something that's passionate with Mr. Palms. So Mr. Palms, would you like to share what you had on the volatility in the crypto space? And then we can go to the next topic from there.
Yeah, I first, let me say thank you for having the opportunity to come in again and just share a little bit of insight. I want to express how much those of you who've listened over the last 15 minutes to JJ, given phenomenal information. And one of the things that he talked about is the trend, and that is whether crypto goes up, whether it goes down, it's always going to come back up. And that's a beautiful, beautiful thing. Secondly, he mentioned that if you don't have $60,000 to buy a coin, you can always just invest. You can dollar cost average down when it goes down. Same procedure you would do in stocks, you'd be doing the same thing over here. So phenomenal opportunity. I wanted to throw some names out. I said I was going to wait till next week. But I want to throw
get some
a few names.
All
so
right.
I want y'all to be careful and pay attention.
Okay.
DOT, which is polka dot.
Is that a coin? Is that a coin?
That is.
Okay.
Okay. I want to say that again. DOT, which is polka dot. Now, many of you, if you've been following in the crypto space, you're very familiar with the next one that I'm going to say, which is XRP. XRP. All right. And of course, JJ mentioned Chainlink, and you can find that LINK. That's Chainlink. All right. I'm going to give you one more really quickly. Most of you probably heard it in the news. Certainly, we talked about it on this channel because Elon Musk said, "Hey, Dogecoin," and Dogecoin went crazy. DOGE, DOGE. So here,
Good stuff. Good deal. A lot of exciting crypto stuff. And that's what it's about. I mean, we call the show Bet Out of Debt because when you place a trade, it's called a bet. So that's what we're talking here. And, you know, we talked about betting on real estate. We talked about betting in the crypto space. I know Patrick had something he wanted to share in my arena, the stock space. And so Patrick, would you like to talk about patterns and trends in the security stock arena? All of this crypto stuff and cyber and all of this stuff. Man, I'm still learning that. So let's get into our game plan, Patrick. So would you like to share with our audience?
Yes, absolutely. So I like to analyze stocks, analyze the overall market by looking at trends. Anything from ETFs to maybe single stocks. And I look at both fundamental analysis and technical analysis. However, I think technical analysis tends to be more powerful because it looks and outlines an established trend. Fundamental analysis, of course, you're looking at the balance sheet, the price, the price per book, price per sales, the performance of a company over the last quarter. So it tends to be backwards looking. That's you might want to look at the financial position of a company if it has low debt, a lot of cash, increasing sales to get into a particular company or a particular stock. However, in terms of predicting where that stock may actually trend to or go to in terms of price, one has to be respectful that the prices in the stock have all the information there is about that company. So that's called the efficient market hypothesis. That means that all the fundamental data that's out there is already priced into the stock. And so when we look at trends, I like to do trend lines, and I'll bring up one stock right here, or an ETF called the QQQ, and I'll just start sharing the screen here. Can everybody see this?
Yes, sir.
Okay, so after the correction of last year due to COVID-19, the market has made a steady trend going upwards, as you can see here. And that's because stock prices are pricing in that the market is going to get better, that the COVID-19 is going to get resolved at some point. Now, as the market way back in, last year has absorbed a lot of the stimulus that the government was passing, that tended to put a floor for stock prices right around here and right around here. And in anticipation of the economy getting better, again, the COVID is being issues being resolved. The price of this ETF, which is the QQQ, that's the top 100 companies on the NASDAQ, and pretty much represents, follows the overall market, has continued to move higher and higher and higher, and all the way up to making an all-time high in anticipation that all the vaccines that are out there are going to permanently eradicate COVID-19. However, because there's so much stimulus out there in the market, and the economy seems to be really moving a lot faster than people anticipated, there's inflation fears that have knocked down the stock market, and people are fearing that the inflation will eat at profits and it will, I guess, kind of get out of hand. However, in drawing this trend line here, what I've seen is that the inflation fears that have evolved right from here and right from here have not pushed the stock market prices down below this key trend line. So in the final analysis, as long as this trend line continues, I think a lot of the inflation fears will abate, because with more stimulus and a faster growing economy, that means higher profits, fatter gross margins, and a healthy overall economy.
Oh,
And that's why I look at price trends.
gotcha. So in layman's terms, I know, Patrick, you are an accountant for a very prestigious accounting firm in Los Angeles.
Mm-hmm.
And so you used a lot of financial jargon, investment jargon. In a nutshell, if I interpreted what you were saying correctly, you were saying that the market is going to continue to go up based on the patterns that you charted. Is that correct?
Exactly. Because I think the fear that inflation is going to erode profits and overall wealth of companies, I think it's going to be more than offset by the growth potential in revenue and net incomes of these various companies.
Yeah, and it's kind of along the lines that JJ was talking about earlier. I thought that was a really good comparison when he was saying, the flu epidemic back in 1919, and then almost 100 years exact in 2020, we have this pandemic, and he described the roaring 20s. So we're just about to go into the roaring 20 phases, and investing in crypto and NFTs and all of this other stuff. So I see the catalyst of more growth. What about you guys? You guys want to share in that? Hey, JJ, I think you're muted.
Yeah, let me jump in real quick. I'm looking at your chart, Sleepy, and this is from Yahoo Finance, which is, one of our largest search engines that we can go and find information, right?
Yeah, and it's most popular tool used for charting stocks and options, but go ahead. It's the most popular.
Okay, it's the most popular. And up here we have a thing of Investco QQQ. I'm invested with Investco in some of my stock market stuff. So very, very reputable company. And then you go over to the bottom right and it says cryptocurrencies, Bitcoin, 59,000, blah, blah, blah.
Oh.
Yes.
Now, what this is telling you is that the largest search engine for financial information now supports Bitcoin and cryptocurrencies in the same space that they support stocks. This is what I was talking about all this stuff happening on your phone. So what is the difference in a digital currency if you flipped over here and your number's 50,000 and you flipped over here and you went to your Bank of America website and it says 50,000, then you punch a button and you send your stuff from Bank of America to Investco. Now you press a button and you go to Investco and it says 50,000. Then you press another button and you send it from Investco to Bitcoin And now you press another button and look at that app and Bitcoin says 50,000. In terms of your spending power, what is different between Bitcoin, your Bitcoin app, your Investo app, and your banking app?
Not much.
They're all on your phone.
Yep.
And it's not just a button that you push. We're the ones that think it's different.
Yeah.
Right? Based on our history of going to the bank, and then I got to get some cash out, and I can't just sign. It's hard to just sign your check over to somebody. You got to sign it to them, then they got to go to the bank. That's all last century. It's all over. Now you can get your money deposited directly. You don't have to get a check anymore. It'll go from your employer into your bank account, to which you can then press a button and put it into crypto. And how many people out of 300 million does it take to drive a market forward? So here's another thing that I see happening. The wealthy all over, they're called whales, and they're buying major amounts of crypto in one drop. We're buying 100 million of crypto in one drop. We're buying 100 million of Bitcoin in one drop. And then they come out and tell you, oh man, this is the hottest thing. So you're saying, Dogecoin. Dogecoin was sitting there at the bottom. And then Mark Cuban said, yo, Dogecoin is the hit. I got millions of it. Then what happened? Snoop Dogg came out. Yo, yeah. Dogecoin is what's happening. And the stuff went right through the roof.
Yep.
And when we say through the roof, we don't mean that it's unattainable. I think Dogecoin is still under, if I'm right, it's still under a penny per coin. But it's just gotten so much more valuable. So you talk about something with an upside. If you have $100, you can get like however many Dogecoin, maybe it's 300 or 500 with $100. Over the course of time, as that trend goes, it'll be, let's say it's 500 for $100. And then as that trend keeps going up, it turns into 250 for $100. And then quietly it turns into 100 for $100. And then quietly, you can only get like 5 of these for $100. And if you got in when it was at this point, by the time it gets to $1 to $1, however many Dogecoin tokens you bought when you could get 1,000 of them for $1, they're now worth $1 a piece.
Yeah, I don't think anyone arguing with you, JJ, that there's really no real difference. It really comes down to what you're comfortable with and your risk tolerance. I know for me, when it comes to the crypto space, it is exactly what you said before. It's digital, and it's not a tangible asset, if you will. It's digital, but from a currency, from a financial standpoint, you're exactly right. It's one and the same. Where my comfort level breaks down on crypto for me, which I'm trying to get over, is when I have stock, I have a tangible company and a tangible product. So I can look at product sales and revenue. I can look at profitability from that to see. And then so I have those measurables, those KPIs, those key performance indicators to give me a comfort level on the direction of the asset. With crypto, it is a different model to do so. And so, but it is no different in risk or value. So will you add to that? Because I know you have something to say related to that.
I think the best way to think of crypto right now is as an emerging currency, right? So it's not a tangible asset, but neither is the yuan, unless you go out and get yourself a bunch of paper yuans or paper euros. Those are all, it's it's a way, it operates as a currency now. So the trend that you're seeing expanding, when you're able to get crypto onto PayPal and you're able to use it on PayPal, PayPal is just a merchant system that allows you to move digital value from one place to another. And if you can use your PayPal account on your Amazon so that you can use that digital currency, be it cash, be it stock, be it crypto, and you can pay for something on Amazon. So it's just digital moving back and forth, and then something tangible shows up at your door. What you have now is a new emergent currency. And so currency markets where they do go up and down. There's volatility in currency markets. However, when the currency is being accepted by Amazon, what it means is that everybody's going to be able to buy stuff with it. And now that everybody's going to be able to buy stuff with it, can everybody get it? Yeah, because it's right there on your phone. So you're going to have a bunch of people that don't necessarily want their spending tracked by anything outside of their blockchain. And so, one of the main things with cryptocurrency is that the government is trying to find out how they can start tracking it because they can't track what people are doing with it. So you have a bunch of people that just from a privacy standpoint would rather just hold crypto. And
Gotcha.
It's being used now as currency. So imagine if the money in your bank was going up at the same amount as what Palms just described with is it called a DTH, DTF?
DHF.
DHF.
Delta Henry Fox.
All right. So if the money in your bank was going up as much as the DHF, now DHF is not going to match the currency market, the crypto market. Crypto market's going to go up faster than a DHF.
Right.
Absolutely.
DHF is going to provide you stability. So just imagine, so it's functioning kind of as a bank. Imagine if your bank was paying you 10% interest every month. You would feel like the only place you want your money to be is in the bank.
Yes. Yeah. And why wouldn't you put it there?
Yeah. And except for that, the bank ain't doing that. You know what the bank is doing? The bank is taking your money and investing
in crypto.
Absolutely.
Right.
They're paying you less than 1%, and they're making. Listen, Bitcoin was at what? It was at 5,000.
Yeah, about 2 years ago.
Yeah, about 2 years ago. So
yeah, I remember.
2018, we had what, or Donald Trump got elected in 2016. He started in 2017. What they do in 2018? They had a big tax cut for the wealthiest individuals in the United States. 65% of that 1.9 trillion went straight to the top and is supposed to trickle down to you. But it didn't. Why didn't it? Because they took it and they invested it. When they got that tax break, they came back. First thing they did was they bought their own stocks. So they did this big stock buyout. That's why the stock market didn't drop when everything else did, because it was being fueled by money that had been kept offshore so they didn't have to pay taxes on it. And now they didn't have to pay taxes on it. They came back and bought up all their own stock.
Wow.
What's the next thing they did? Right from there, you saw the crypto market start to rise. Why? Because you had whales who now had enormous amounts of money that they had a limited number of places that they could put it. And one of the places they could put it was in crypto. So you had all of this quiet mega buying that went on in crypto for the last 2 years. And now that they are positioned to profit, if you bought the crypto, let's say you got Bitcoin at 10 and you put $1 million in, so you got 10,000 Bitcoins, right? So now you are positioned for the rest of the time, because the key to these is that it's limited. There's a limited number. It's not like the stock market where it could just go
Yeah,
up.
stock market is infinite.
Yeah,
It's just,
like that.
yeah.
It's limited. There's only so much of it you can get. So it's much more like gold.
Yeah. Yeah.
And instead of people putting their money in gold or in precious metals, they're putting their money over here in currency. So you're seeing inflation. Inflation happens. Inflation is not when things get more expensive. It's when your dollar gets less valuable. So it takes more dollar to buy those same things.
Yeah.
But people aren't buying as much stuff now, partly because, ain't nobody going no place. So everybody eating at home, everybody doing stuff at home. So they're not doing that with their money. So the inflation that you're seeing is actually evidencing itself in the crypto market and in the stock market. Stock market's going up. We're saying, great. Is that inflation? Well, yes, it is. It's the same stock, but there's more people buying it. There's more demand. So the price of it's going up. Crypto market, same thing. The price of it appears to be going up because the value of the dollars are going down because they're printing so many dollars and there's still the same amount of stuff. So it takes more dollars to buy the same things.
Yeah.
And and part of what's keeping that from showing itself in all the stuff in our economy, the price of bacon and the price of gas and the price of this and the price of that, is because all of that money is not flowing through the economy. That money is being siphoned off. And so you're seeing in the crypto market, this amazing expansion of the crypto market, even though there's a limited amount of crypto, because there's all of this money that's coming out. People are putting it into something there's a limited amount of. The value of it, the number of dollars that it takes to get in is going up and up and up and up. And $1.9 trillion started dropping today. It's hitting people's bank accounts today. People gonna go out tomorrow and start spending.
Yes.
Tomorrow.
That's
yes.
Right? It's going to start on the base level, people who are behind on their bills, right? That's where it's going to start. That money has to go out tomorrow to keep people from getting kicked out of their houses, to keep people from losing their cars. That money got to go out tomorrow. The next wave of money, you got all this unemployment insurance with an extra bump of $300.
Yeah.
Right? So once those bills are paid, people are going to start buying stuff. Except for that, everybody don't want to be out there, I don't want to do all that right now. So what am I going to do? I'm going to buy my stuff where I don't have to interact with people. Where is that? That's on Amazon.
Right.
I'm going to get it delivered to my house.
I own that stock. I'm an owner.
My food, I'm going to have it brought to my house. Amazon got a grocery store. I get on with my groceries.
That's right.
Anything that I think of, I need another light to do this. Where am I going to go?
Got a few shares of that.
I'm going to go on Amazon. And remember, 20 years ago, Amazon stock crashed because they couldn't show that they could make any money.
So one of the worst, JJ, can I speak on that? One of the worst things I did back around
Amazon.
Well, around 2000 and I don't want to give the dates because you can go look it up on the charts. But I had an opportunity to buy Amazon at around $80 a share.
Okay, I'm out. Excuse
me. and BlackBerry.
Don't do it.
I had the choice between the two.
Don't do it.
You know where I'm going.
I know where you're going.
And so I had $2,000 to spend. I put $2,000 towards BlackBerry instead of Amazon. BlackBerry went down. So I bought BlackBerry, and I bought some Apple too. And so the Apple kind of went crazy, but because I hedged BlackBerry, right? Because BlackBerry was the thing. And Amazon went up to about 3 something, and then it fell back down to around 150. And I had a second opportunity. And here's what I would say for all of the investors out there that I know now that I wish I would have known then. That is, you have to look at the future. Invest in the future. If I were to look at BlackBerry, looked at the keyboard, which everyone was crazy about, people were complaining, I need something to touch. The keyboard's touchable. If I would have just picked up, and I had an iPhone, if I would have just thought about the iPhone, the App Store, the auto correction and everything on it, and what Steve Jobs was doing, I would have not put BlackBerry. And then if I would have really thought Amazon through, how Jeff Bezos went from being a bookstore to everything, I would have just dumped my money in Amazon because of the vision. So I guess along your point, JJ, you really look at the vision of the company, and the companies one should invest in is not the company like a BlackBerry that's a specialty in one little thing. The companies that really blow up are the Apples, who have the App Store revenue, the phone revenue, and the computer revenue. They're getting into cars. Right. What else do? They do other things. So when they expand in different products and markets, where and Apple got the wearables with the watch, it goes on and on. Amazon, when you see them grow the way they grow into not only books, because we all know that's what it started with, right? Books. Mm-hmm. But then they went to all kinds of products. AWS, the server business, is the biggest in the world. And rockets and all of that. So that's why if you want to invest, what's the next Amazon that's still relatively, it seems expensive, but not really as expensive as the growth potential in the future? It's Tesla. Tesla is the Amazon that I did not invest a decade ago. Cars, solar, energy, rockets, just all those, and a leader with vision, just like a Bezos, just like a Jobs. You have Musk. So those are the type of companies. And even though they seem expensive, you put $2,000 towards Tesla when it falls, you just wait for it to fall like where it's falling right now, and it's going to win 5 years, 10 years down the road. So you can't be myopic and just look at the short term. You really have to have that long-term view. So it's right around those lines. But guys, I think I'm going to wrap the show up for today. JJ, I think you want to jump in. Pons, you want to jump in. After you guys, we'll wrap it up. And because we ran over a little bit on time, but go ahead, JJ.
Listen, I'm going to defer to Patrick there because he looked like he really wanted to jump in.
Oh, go ahead. Sorry. Go ahead.
Yeah. Sorry for the technical issues. I'm not sure what happened. But anyways, in looking at the future, like you were talking about Amazon getting into rockets and service and stuff like that, another stock that you may want to look at is NVIDIA. Because not most people think
I own that stock too. It's a big hold.
I do too. I do too.
I wonder why.
See, most
Did
people
I tell you about that stock too?
Yeah, of course.
But let me conclude. See, most people think of it as video gaming, and yes, they're very big in video gaming. They're the number one.
They do cars and everything. Go ahead, Patrick. Break it down.
But
servers.
So they're strong into video graphics, as everybody knows. But a lot of people use them for cryptocurrency mining.
Yes, they got a special card just for that.
Yeah, it's the 30 series Ampere, which is just very, very crazy, because to do cryptocurrency effectively, you have to have strong GPUs, and they're the best GPUs out there. So NVIDIA, again, I'd say is pretty good for that. as well, they're getting into AI, artificial intelligence. That's another industry of the future. They're getting into self-driving cars.
Big time. Go read their
Data
10K.
centers.
Go read their 10K.
Data centers.
Data centers, big time. Go read their 10K.
That's called NVIDIA, Patrick.
Yeah,
NVIDIA. So the ticker symbol,
NVDA.
Yeah. NVIDIA.
I'm a large owner of NVIDIA. But
I as well. But anyways, they have such organic growth that in all of these areas that I just described, that I think right now it's trading at around roughly $500 a share, $510.
Yeah.
I think 5-10 years from now, man, it's going to go just like Amazon did.
Yeah, for sure.
For sure. Hey, not only that,
I'm sorry.
This conclude. They also are a provider of semiconductors. They're part of that semiconductor industry where there's such a huge shortage. It's almost to the point where President Biden wants to create like some kind of task to build all this infrastructure so that the United States could remain the leading country in producing semiconductors, because there's such a shortage. The government's getting involved.
Yep, good stuff. Did you guys wanted to jump in? And I'm sorry, I was a little braggadocious on the NVIDIA. It just touched my heart. NVIDIA.
It's touching my heart too. So I own lots of NVIDIA. You and me both. So don't worry about it.
I recently did a call option and lost a little money on NVIDIA because I was on the wrong side of the trade. But my real account overall, I'm doing well. But go ahead. Did you guys want to comment before we wrap it up?
I want to mention all of us, with the exception, I think, of JJ, is in NVIDIA. And I want to say to my two comrades, Super and of course Troy, they turned me on to NVIDIA, and without any hesitation and with much conviction, I invested in the stock. So I appreciate y'all so much. I want to turn it over to JJ before we get ready to close out today's show.
Yeah, JJ, before we close it out, let's.
Well, it seems like we have identified a strategy that could really work for some people. Crypto is growing exponentially right now. You can grow crypto over a certain period of time, then put it over into the, what's that called? The DHT? DHF. So let's say if you were able to grow your crypto to $100,000, and then you put in a DHF where it's going to make 10% a month, you getting ready to be a millionaire.
Absolutely.
Right?
He showed it last week, JJ. If you look at the episode last week, Palms showed you the path. Exactly what you're saying, but go ahead.
I will go back and check that out. So what I would suggest to people is, number one, make your investment a regular thing, no matter how small it may seem to everybody else. If you take a book and you put it down in one place, you got a book. If you do that for a month, you got a pile. If you do that for a year, you got a library. And so it doesn't matter what it looks like when you get started. The only thing that matters is that you do what you're talking about, Troy, which is to pay yourself first, however small that amount is.
Yep.
Your money comes out first. Everybody else gets their money next.
Mm-hmm.
So if you can do that, and you can just look at life and say, okay, what's coming next? Well, we know that that self-driving cars are on their way, right? They're already telling us about it. We know that that car is going to be linked to other stuff, like it's going to be linked to your phone, which we already have now. You get in the car, your car links up to your phone right away. Your phone is then going to be linked to all these other apps. Maybe you have a home security app, or you can turn the lights on or off, or you can lock the doors from your phone. So now your car is connected to your phone is connected to your house. So what we're having here is something called the Internet of Things, where all of your things are connected to the internet and they're all connected to each other. So you got a refrigerator, you're running low on milk. The sensor on the bottom of the thing says, oh, you're almost out of milk. Your refrigerator calls, connects to Whole Foods and says, hey, he's out of milk. Can you please prepare that? Your Amazon then charges it directly to your account and brings the milk to your house. And by the time you arrive on from work, your groceries are already there waiting on you. That's where we're headed. And so if we're heading in that direction, I would suggest to everybody, find some way to put your money in the path of that trend.
Powerful. Good stuff. Palms, I see you shaking your head. You have something?
I'm just, I'm in awe of his clothes. I mean, I thought I was a good public speaker. I can't even touch it. JJ just closed it.
Let me tell you something. This guy, JJ, is insane with his public speaking and stuff. I mean, the guy's been an actor in Hollywood for over 30 years. And I mean, I have been on other platforms with JJ, and the one I recently was on was the J5 podcast that we did. And man, JJ is a phenomenal speaker. And then on top of that, the reason why I wanted him to be our first celebrity guest is he is a real investor. You can see through the screen and what you hear from JJ. He is a real investor, and he's an inspiration to Black young men out there that have maybe a challenging time right now, and an inspiration to just all of us. And again, I would not have my condominium up in sub penthouse, very nice, in downtown Vancouver, next door to JJ.
Mine, by the way,
if it wasn't for him. But the difference is, JJ, and you can say, when you told me about that, I mean, I did not hesitate. I was like, really?
Correct.
Boom. And that condo wasn't cheap. I'm not going to put it out there, but it wasn't like you're downtown Vancouver, the most expensive and popular city in all of Canada. It was expensive. And like he said, it's triple in value. And so again, JJ is a real investor. He's not coming on just as an actor, but he's an actor / investor. And I thought that would translate very well on the TV show. I would say on our show, it's not TV, but internet show. So JJ, we're thrilled to have you. A very smart, astute, intelligent investor, an accomplished actor. I know you recently got some awards in the last few years. Maybe, and then let's promote your show again. That's on Apple TV.
All Mankind. It's on Apple TV Plus. Jump in on season 2. I'll be there.
And what's your character name on All Mankind?
The character is Nelson Bradford, and he's the head of the Department of Defense for the United States. So originally it was going to be Colin Powell, and then they couldn't get the clearance to use Colin Powell's character on the show. So they changed his name to Nelson Bradford.
Okay. So you were going to play Colin Powell. That would have been dope.
Yeah.
Yeah, that would have been dope. All right. So, I mean, that's it for our show today. As always, we call this show Bet Out of Debt, because when you place a trade, it's called a bet. And hopefully it's a winning one that would keep you out of debt. And as always, keep investing. And thank you all for your participation, and have a good day.
Peace. Blessings.
Blessings.
Oh man, what a good show. We're still live. I got to shut down the live stream.